world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to welcome Dave Birch to the podcast. Dave is Director of Innovation at Consult Hyperion, a secure electronic transactions consultancy. Dave is an internationally recognized thought leader in digital identity and digital money. He's been named one of the global top 15 best sources of business information by Wired magazine, one of the top 10 most influential voices in banking by the Financial Brand, one of the top 3 most influential people in London's FinTech community by City A.M, and much more. Dave is perhaps Europe's most influential commentator on emerging payments and adjacent technologies, including digital identity, blockchain, and privacy. This episode is a timely follow-on to recent episodes with Pascal Bouvier and Taqanu founder Balazs Nemethi, both of which raise the topic of digital identity. When it comes to digital identity and the technologies required to support its implementation, few are as knowledgeable as Dave Birch. As always, connect with us on Twitter, Facebook, or LinkedIn. Tweet at us at Rebank Podcast or at me, your host, at Will_Beeson. If you like Rebank, please subscribe on iTunes or your podcast platform of choice and consider leaving us a review. Please enjoy today's show with Dave Birch. Dave, welcome to Rebank.
Testing, 1, 2, 3. Is that okay?
Perfect.
All right, great.
A little bit of context. Tell us about Consult Hyperion. I've always been attracted to your super cool name and top-notch blog. Tell us what you guys do.
Well, Consult Hyperion is a specialist electronic transactions consultancy. We are 50 people. We have offices based in Guildford. We have an office in New York. Our clients aren't so much the fintech players. Our clients tend to be the incumbents. So we work for people like, MasterCard and Amex and Barclays and Lloyds and Transport for London and people like that. And our little niche in the world is helping them to take advantage of new technology in transactional environments.
You do a lot of work around digital identity, blockchain in the context of some of the work you're talking about. You guys prepared an excellent report with the support of the Omidyar network on inclusion, identity, and privacy.
Oh, yeah, thanks.
Which everyone should definitely check out. Really top notch.
Thank you.
So tell us, what's the problem with current physical identity systems? What are the limitations?
Well, you've just summed part of it up by saying physical. So the problem that we have, if you're looking at the financial sector, is we need a certain kind of identity to get things done, right? To open bank accounts, to send money from one person to another. And in order to get those identities, we need some sort of underlying identity to build on. But of course, those underlying identities are by and large physical. And they're also by and large not that secure, actually, as it happens. So you probably have seen there were stories in the newspapers over the weekend, as in fact there are every weekend at the moment, about some form of faster payments fraud going on, right? So I think it was a builders this weekend, wasn't it? So somebody got an email purporting to come from their builder, but of course it actually came from a fraudster, asking them to transfer some money for the building work. And, so the email is of the form, by the way, our bank is no longer the NatWest in Hastings. It's Standard Chartered in Nairobi. Can you send the money to this account? And people do. Although in this case, actually, it was RBS and Barclays in the UK. And now you would think that if I fraudulently sent some money to a Barclays account, if the police went round and knocked on the door, Barclays would cheerfully tell them, well, it's Dave Birch, of course, because of all the stringent KYC, AML, CTF, PEP that we spend billions of pounds on every year. But of course, whoever it was that opened the account had opened it with a forged gas bill and the trail is dead. So we need identity to get stuff done. It's becoming more and more important. But the sort of underlying platforms that we're using are no longer fit for purpose. And so we're stuck, and we need a bit of new thinking. You have sort of Scandinavian models where banks provide the identities, and that's used by governments and other people to move things forward. You have what you might label the sort of Asian model, like Aadhaar in India, where you have a big central database and all the data goes into that. You have the sort of continental model where you have like a government identity card and you use that to open accounts at banks. And, there's a variety of different ways forward. My feeling is that we need a different sort of paradigm. And I mean that in the proper sense of the word. In other words, what we need is a different mental model of identity, one which is more based on a distinction between your sort of underlying real identity, if that's what you want to call it, and the identities that are needed to support transactions in the virtual space. And if there's going to be some progress, I think that might be where it comes from. And to put it in its sort of bumper sticker format, that means shifting from transactions that are based on identity to transactions that are based on credentials, essentially. And the lazy example everybody uses, of course, and I'll use it just the same as everybody else, is when you go into the pub and you're trying to prove you're over 18, there's a world of difference between proving who you are, showing the pub your passport or something, which has got all sorts of things which are none of their business in it, like your name, for example, and nationality. So there's a world of difference between that and proving that you're over 18, which is a credential. So if I walk into the pub and, you can imagine, I go to the pub, the bouncer has got a phone, how phones connect by Bluetooth or QR codes or NFC or something, whatever. And his phone says to my phone, is this person over 18? And the phone sends back something that's attested to by Barclays Bank, which says this guy is over 18. Of course, then you want to force an authentication to make sure it's my phone. So I'd have to enter a PIN or something like that. You can see how the requirements of the transaction are met. I can now go in and have a drink without leaking personal information or providing personal information into a space that it can be stolen from. By and large, when you're asked to show your identity for some purpose, generally it's a proxy for some other piece of data that they actually want. And of course, every time you're asked to give your identity, that's another place it can be stolen from. That actually makes the problem worse, not better. So that's why I say paradigm shift. We need to change from this mental model that I need to show you who I am to a model which says I need to show you that I'm allowed to do something. And I think that has the germ of the solution in it.
And I guess that makes sense too, because you're no longer using a passport with certain data points to cross borders and a driver's license issued by a different entity with other data points to drive a car, and similarly open bank accounts, as you say, proofs of address, things like that. All identity related information can be stored comprehensively in one place, and those single required data points can be confirmed or denied on a one-off basis.
Well, I wouldn't necessarily say stored all in one place, because in the general case, you'll have a variety of different, just the same way you have 4 or 5 different credit cards in your wallet right now, you'll have 4 or 5 different identities. There'll be, Dave Birch at work, Dave Birch at home, my hobby identity, my Dungeons and Dragons identity, various other things. And you use those different identities in different circumstances. And, they may come from they may contain portfolios of attributes that come from very different organizations. I think in the sort of the version I'm thinking of, for most of our clients, you would imagine that the bank identity would have a very core role to play in that. So there's lots of reasons why you don't actually want people's identities to be part of wide varieties of transactions. If I go into Lidl to buy some groceries and I go and pay with my debit card, in reality, I'm not paying Lidl. What's happening is a virtual identity somewhere out in cyberspace of me is transferring funds to a virtual identity cyberspace version of Lidl. And by allowing those transactions to take place using only the attributes that are relevant to the specific transaction, then we might actually be able to get a grip on identity fraud, which was up another, whatever it was, 50% or something last year. So yeah, so it does. So I think this is why it's difficult, because you need to change the mental model, and that's hard. For people like us who've been thinking about this for years, words like virtual identity, attribute, they mean very specific things. These aren't generic terms at all. But I think maybe we need to do a better job of explaining to policymakers and so on what these things are. They see identity, I think, in a very kind of Victorian way. So when you have people in the government talking about identity cards and so on, I mean, they're literally picturing a wooden filing cabinet with your name and all of your personal details in it somewhere. Whereas, of course, if you're talking to an 18-year-old, mathematics undergraduate at university, they think about it in terms of keys and certificates, and it's a different thing.
Yeah. We had a very smart fintech-focused venture capitalist on a few episodes ago named Pascal Bouvier, who made the...
Who told you he was smart? He told you that?
This is my personal view.
Oh, I was going to say, I think you need to check credentials a bit more accurately.
Using the technical term of a technical definition of the word
make sure
credential.
You don't cut that out. I wanted to hear that.
Absolutely one of the smartest minds in fintech, in my view. And he made the seemingly obvious, but for whatever reason overlooked point that if there is so much fraud, there's so much identity theft, there's so much concern around the poor standard that we currently have, why isn't there greater urgency from public sector, from private sector, from citizens to drive change? I mean,
actually, I've actually just come from a meeting. I won't say why or who. But I was a couple of minutes late here. I've just come from a meeting discussing this issue with a very large international financial services organisation. It's a baffling paradox. So if I go to open a bank account, I have to take along something that's trivial to forge, like a gas bill or something. In fact, I can tell you a true story, but I won't name. I personally attest. There's a true story. The CEO of a bank, who I was talking to, had some trouble because him and his wife had just moved house, and they wanted to change. I think it was a savings account, and so he just logged in to do it, and it was rejected because he hadn't been at the address for 6 months or something like that. So he was asked for a utility bill, which he didn't have because it's all online.
Presumably an account at his own bank.
This is his own bank. And so he got a utility bill from his supplier for the old house and edited the PDF to change it so that it was his new address. That's a CEO trying to open an account at his own bank, where he's already had an account for 50 years.
Are you suggesting this is why fraud is so pervasive in financial services?
No. What I'm illustrating is that we have this ludicrous stat. So in other words, that's considered acceptable, right, that you ask for this PDF or utility bill. Now, actually, if you were going to open an account with me, I wouldn't care less about your utility. I want your LinkedIn profile. Like, if I look at your LinkedIn profile, I will know far more about whether I should let you have an account or lend you any money or engage in any form of transaction with you whatsoever, right? Your LinkedIn profile is a far more accurate reflection of your worthiness across so many different axes. But of course, LinkedIn profiles don't show up in the FCA guidance or the FATF or, whatever, right? So I open an account on your LinkedIn profile, I could potentially be fined billions of pounds because, I didn't look at a stupid gas bill because that's on the list of things that you're supposed to look at, right? The one from column A and one from column B sort of thing. So we're in a mad identity world at the moment, which makes no sense. One of my favourite ways of illustrating it is, because we're talking in the UK at the moment, I'll give you two newspaper stories from the UK, recent newspaper stories from the UK, which I think will illustrate the situation very well. So there was a story in the Financial Times from which was included an interview with the head of MI5. which is the spy agency, right? And the guy said, I mean, I'm paraphrasing, but essentially what the guy said was, it's very difficult to be a spy nowadays. Because in the old days, if James Bond, I know he's MI6, but you get the point. In the old days, if James Bond wanted to be Dave Birch, James Bond would just go and get a fake New Zealand passport that said Dave Birch, right? Which I assume they have drawers full of these things at MI5, isn't right? So I just need to get a passport that says I'm Dave. But fine, I'm home dry with my passport that says I'm Dave Birch. But now it's really difficult. Because if I want to pretend to be Dave Birch, I need to get a Facebook profile, a LinkedIn profile, Twitter, a website maybe. Like, it's really hard. It's much harder to pretend to be somebody else. You say, oh, well, anyone can set up a Facebook profile. Well, you can. But to set up a convincing Facebook profile, apart from anything else, you had to have started 10 years ago doing it. It's really hard for James Bond to pretend to be me now, much harder than it used to be. And then I'm reading another story, which I think was in the Daily Mail, about how internet dating fraud is going through the roof, and it's a terrible problem and so on. Of course, because 20 years downstream from that New Yorker, was it the New Yorker? On the internet, no one knows you're a dog. We've made zero progress on this whatsoever, right? So there's a problem at internet dating site, and it was very odd that several of these stories I read about internet dating fraud, where men had defrauded women, the men had claimed to be from MI5, right? So I meet a woman on an internet dating site, and she says, "Can you pop round?" And of course I say, "Oh, actually I can't this weekend, actually because I'm with MI5. I'm on a top secret mission," and people believe this, whatever. And these women were defrauded out of tens of thousands of pounds. And that led me to think that we have this oddly paradoxical modern world identity infrastructure where James Bond finds it hard to pretend to be me, but I find it very easy to pretend to be James Bond. And that seems asymmetric. Now, that can't be right? So, we should have some sort of infrastructure, which means if I'm a spy or I'm in the witness protection program or, whatever, there's some legitimate reason why I should have some other identity. Someone should be able to organise this and sort it out. Conversely, if I'm trying to persuade you that I'm from MI5 on an internet dating site, that ought to be marginally more difficult than it is now, right? And obviously, if I met you on an internet dating site, it's, I'm looking through the pictures, you're a good-looking guy, I click on the picture, right? And it says, you work for media or whatever, some other thing that you say to impress people. The first thing I did was, what's your LinkedIn profile? It's the first thing I would do, right? And if you tell me, oh, I don't have a LinkedIn profile because I'm with MI5, I'm like, come on, now I know you're a fraud, right? Because actually, if you were with MI5, you'd have a fake LinkedIn profile, of course. It doesn't make any sense. So we're in this paradoxical, the whole thing's a mess, basically. But I'm just the game show host for this stuff, right? Back at the office, there are people that know this stuff inside out, are working on this stuff every day. And I see what's going on and the way they think about it and the way it's evolving. And I feel that shifting from a world of identifying people to a world of authenticating people, shifting to this world of attributes and so on, moving away from the idea of national identity infrastructure to a kind of era of national entitlement infrastructure, I think has in it ways forward. I think I can at least see ways forward there.
So what are the drivers to real meaningful progress? Is it public sector led, private sector led, and how long is something like this likely to take to play out?
Well, you'll have seen I've written on the blog a lot. I'm very bank centric, so I think the way to move forward on this is bank centric, and I think conceptually, what this would mean in practice is a spectrum. But conceptually, I think the way forward is to have some sort of financial services passport. So the idea, when I first encounter the financial system, I come to the bank, they ask for my financial services passport, I don't have one. They issue me with a passport. They stamp it with a visa. Like I go to Barclays. Barclays give me my financial services passport, and they stamp it with a visa that says I'm allowed to visit the Kingdom of Barclays from now on. So now I can get into the Kingdom of Barclays and open accounts and do whatever I want to do. And then a bit later on, I go to Virgin to open an account with Virgin, and they ask me for their financial services passport, and I show them the one that Barclays gave me. And they can check it and they see it's real. And then they put a stamp in it which says now I can visit the land of Virgin and so on. But crucially, they haven't had to do all the KYC, AML again.
So the risk then, I guess, would lie in the case of Virgin then onboarding you. Would lie with them? Would lie with Barclays having initially onboarded you?
Well, if I show them a Barclays financial services passport that says I'm Dave Birch, and I turn out not to be Dave Birch, well, then Barclays couldn't have done the KYC properly, right? So Barclays would be, in that example, liable, unless they could show that they'd done the KYC properly, and it turns out that the passport I'd shown them or the driving license or something was correct. As long as they've done what they were supposed to do, then they're off the hook, But given that the banks in the UK spent, depending on who you listen to, £7 billion-ish on KYC AML stuff last year for, as far as I can tell, essentially no benefit whatsoever. If we can use the new technologies, biometrics, blockchain, cryptography, if we can use these new technologies to make a dent in those costs, if we see identity as a regtech rather than as a fintech, then I feel that we can get momentum.
I'm a big fan conceptually of this concept that's gaining a bit of traction around incremental onboarding, if you will, i.e. if a customer is interested in opening a savings account, it's a few pieces of information. If they're interested in opening a transaction account, it's a bit more information. If they're interested in doing larger transactions, then they need to provide even more information.
No, I agree with that. So in fact, the FATF guidelines on this idea that you should use risk-appropriate measures, I think, is absolutely correct. And you can see it at the sharp end with things like refugees and so on. Like if someone's a refugee and they have no identity and they're dealing with small amounts of money, then just give them a damn account, By the way, there's conceptual reasons why you want to do that as well, because the way the kind of AML regime works at the moment is you erect these high barriers to try and keep the bad people out of the system. As a consequence, the bad people do everything in cash, and you've got no idea what's going on, right? I actually think conceptually that's the wrong way around. Conceptually, we should lower the barriers. We want the bad people in the system, because when they're in the system, then we've got AI, big data, machine learning, analysis. Like, unless they're in the system, I can't see what they're up to. I would much rather have them in the system. If you have an account, like I don't know who you are, but you're sending money every 3 weeks to the Bora Bora Mountains, then I might, make a look at your IP address and actually do some actual police work and come around and investigate you. Keeping you out of the system means I have no idea what's going on, but this is a separate issue. So the idea that, I can just walk in and get an account and the maximum balance on that account, like under the old ELMI stuff was, I don't know even what it was it 500 euros? I can't even remember. And, you do at most 2,500 euros a month turnover or something like that. And then when you go up the next level, then you have to provide more data and so on. But by that time, you've been in the country 6 months and now you've got an address and a utility bill and you build up. And I'm all in favour of that. You'd have to ask people other than me, I'm not a regulatory expert, you'd have to ask people other than me why that doesn't happen now. And my suspicion is it's got more to do with US regulation and the potential of being sued in US courts, even if you've complied with the FATF guidelines, than it does to do with anything else.
What are your incumbent clients thinking when it comes to advances in digital ID? You mentioned some large card processing companies, other transactional.
Yeah, well, it's gone
companies.
up. It's gone up the agenda for our clients. I'm happy to say, because that's good for us, obviously. But it's gone up the agenda. But it depends where you are. So for example, in the UK right now, because of what's going on with PSD2, open banking, strong customer authentication, identity has shifted from being a tactical response to specific what can we do about card fraud? What can we do about small business accounts? Okay, but how can we make account opening a bit easier? Each of those had tactical responses in the past. It's now become a more strategic issue, right? So if I'm a bank, I now have to spend money on doing APIs. For the APIs to work, I need to be able to identify the customer. I need to be able to identify who the customer is giving permission to. None of this stuff exists at the moment, right? So this infrastructure has to be created. And nobody wants to waste money on doing stupid things and duplicates and so on. So you don't want to create two infrastructures, one for PSD2 and one for Open Banking Working Group, plus one for the bank's own internal strong customer authentication processes and that kind of thing. So I think what's happened over the last few months is it's taken on this more strategic perspective.
Mm-hmm. And are they taking action? Are they planning to build, to create, to deploy? Are they waiting for someone else to set the standard? Are they lobbying lawmakers to give them clarity? Do they expect these solutions to come from within themselves, or do they expect it to be provided externally?
That's a much more complicated question than it sounds at first. It's a very good question, but it's more complicated than it sounds at first. So there are certain things where, so for example, if I'm a bank and I have to comply with Open Banking Working Group, APIs, which people are working on defining these APIs, I'm not going to make any money out of that. I might as well just wait until those APIs, and I'll just use the same APIs as everybody else. And by the time Open Banking Working Group come up with the APIs, the suppliers will already have the stuff in place. And I can just go and get version 97.3 of whatever it is from my supplier, and it will have the APIs in it, and everyone's happy. That's not a strategic problem. For other areas, what the EBA had as the non-mandatory payment APIs, the specialist stuff that's to do with my bank, maybe there's a little more margin there and it's worth developing something, but it's not obvious to me that the margins will be there to do that on anything to do with payments, because the margins on all payments are asymptotic to zero over. So the question is, if you were going to invest in APIs, you'd probably invest more in the non-payment stuff. And you've got to invest in ID and V anyway because of SCA. So identity and attribute related stuff. So here's an example. So, I've got a debit card from my bank and I can use this, blah, blah, blah. But there's lots of places I don't really want to use it. I don't want them to know my name or my address. I'm buying some little models to paint on eBay. As long as they've got an address to post it to and they get their money, what does it matter to them what my real name and address is and that kind of thing? And of course, that leads to these massive data breaches because the merchants have to collect stupid stuff like my name and address because they need it for the AVS. Then it's another place it can be stolen from. So, imagine there was an API which said, I've got an app on my phone and it gives me, this is my stealth debit card. So now I've got a debit card that says I'm John Doe and my address is 10 Downing Street. It doesn't matter, whatever address you put in, it will okay that. And so now I put that into all my apps, and my apps now talk to my bank account, and now my real identity never leaves the bank. It's locked up in the bank vault. It's safe and sound. And the derived identities, the John Does, that I use to go shopping and so on with, are in my phone, in my Apple Pay, and so on. That's a fantastically more safe way of navigating the online world, I think. And that's the sort of thing I would imagine coming into play as value-added services, that you need to use the APIs to do something that banks can do that other people can't. So I think there are possibilities in that space which actually are really pretty good, right? So, and I know it's trite and you'll get sick of me saying it, but that view of a bank as a place where you store your identity rather than your money, I think is a very vibrant vision of what future banking might be. For most people, most of their wealth is no longer in the form of bank demand deposits. It isn't my money that's in the bank vault. My money is in pensions and stocks and shares and whatever else. What's in the bank vault is my reputation. That's the thing they're looking after for me. And it's a different vision of the future of banking, but I think it's a very real one.
And I guess banks are also looking after data, because money this day and age, digitized is data.
No.
So what's
the vault
between an account balance and a piece of digitized personal information?
No, the vault, I think, is a crucial idea, and this is where the open banking working group stuff could be really very interesting. So if I have important data, I mean, like I do it with I happen to have a Barclays account, and I use Barclays Cloud it on my phone. So things like the kids' passports and my social security card and all this sort of stuff, I have it all stored in that Barclays Cloud. It's really useful, right? Because every now and then, as in a couple of days ago, you get a message. It's for my son at university. He's got to sign up for something for his house, and so they need to see a copy of his passport and what's his national insurance number and things like that. And you have them all in your little Barclays store. It's really helpful and really useful. So the idea of a bank as a data vault, I agree with completely, but it has to be linked with my identity in the right way. Like you've got to know that you can trust the bank with your reputation as much as with the data itself.
What role will blockchain play in all of this, if any? I know you have strong views on that subject.
Well, even stronger after last night. I went to the Financial Services Club discussion on it with Michael Salmi from Equins, who's a fabulous speaker. And he had some slides. I think I might be getting this wrong. Please don't abuse me if I've got them slightly wrong. But I think on one of his slides, it said McKinsey thought that blockchain would be a $110 billion opportunity this year for banks or something, or over the next 2 years or something. And PwC said, blockchain's over. It was last year's thing. It's never going. Maybe we're not going to use blockchains at all. So what all of this means, who knows? I mean, I would normally phrase it like this. So is it plausible that some elements of banking infrastructure might be replaced by some form of shared ledger for one reason or another? The answer to that is probably yes. I think that is probably true for reasons which are too dull to go into at the moment, but there are some architectural advantages to having shared replicated data rather than individual databases. Is it likely that those shared ledgers will be blockchains? I think probably not. Blockchain is a very specific kind of shared ledger that solves a very specific kind of problem, which actually none of our clients have, nor do any of their clients. And for the few that will be a blockchain, is it likely they'll be the Bitcoin blockchain? I think the answer to that is almost certainly no. So shared ledger, likely. Blockchain, possible. Bitcoin, very unlikely, in my opinion.
Bitcoin and Ethereum?
Ethereum's an interesting case. So for the private permissioned blockchains that you see companies building right now, they tend to use Ethereum because of the flexibility of the scripting language that sits on top of it, and the clear operating model with the gas and all that sort of stuff. And of course, that's going to mutate in the future because Ethereum is moving towards a different consensus model anyway. But of course, you've got people like Hyperledger coming along now with these portfolios that are being put in there by people like R3 and IBM, who are building the different components of the ledger from a less cyberpunky smash the state perspective, and more from a. It's funny. I was in a discussion the other day. I won't say who. I was in a discussion the other day. I was arguing with this guy. I made a New Year's resolution to stop arguing with people about blockchain all the time. It didn't really go very well. I'm deranged about it. And the guy said, I made some comment about how blockchain. And the guy said, well, you're only saying that because you work for the man, by which he meant Barclays, I think he was alluding to at that point. Because we do a lot of work for Barclaycard, He said, well, you're only saying that because you work for the man. And I'm like, these are not sentimental people, right? If it was actually cheaper and quicker to do X, doesn't matter what X is, using the blockchain, they would, right? And the fact they don't is because it isn't cheaper and it isn't quicker. So the idea that Bitcoin is going to do away with the pound is fanciful, in my opinion. Could you imagine some form of shared ledger doing away with some other core elements of the global financial system? Actually, you probably could.
You raise the interesting and a very important point of interoperability, in this case in a blockchain context. But I think it applies perhaps even more fundamentally in the digital identity conversation, because so far we've seen digital identities deployed. I think you used India as an example, places like Pakistan, some Scandinavian countries in kind of national ways.
Yeah.
But in this increasingly international, global, connected, open world that we live in, I would suggest that a digital identity system is not fit for purpose to the extent it could be unless there is international interoperability. How is that question likely to be addressed? Because that sounds quite complicated.
Well, I think at the sectoral level, it's addressable. So, banks already have mechanisms for international cooperation. They're experienced at this sort of thing. They have committees and working groups and standards and all this sort of thing. So, if you can imagine if there's some kind of UK financial services passport, and it would have to interoperate, maybe use the same attributes as the EU, or the attributes would have to be understandable, and that would have to go with the world. Well, they know how to do this. I don't think that's that far-fetched to do that. There's only so many ways you can code is over 18, is a resident of, insert international country code here. So I think, within the sector, that seems to me to be achievable. It's much more complicated when you go beyond the sector. So, because we don't do that with national IDs now. You can go and open a bank account with a Brazilian passport, and I assume the bank's got absolutely no conceivable way of checking whether it's a real passport or not. When I was in Australia before, one of the guys there was saying, they use driving licenses as a, if you're in Sydney, you can't tell whether a Western Australian driving license is real or not. It's a bit of a pantomime, really, I suppose. So I think interoperability within the sector is achievable. But nationally, it's a little bit different. And certainly governments allowing other governments to see certain data and so on. This is fraught with issues which go way beyond my bounds on the technology side.
All right. Well, I think we've covered digital identity and blockchain to a decent extent, and we've certainly kept it serious long enough. There's going to be some crazy new stuff coming through with some of these cutting edge technologies, AI, machine learning, AR, VR, new experiences that can be created and deployed. I personally look forward to the day when I can order my Iron Man suit from where you sit and people you talk to and the work you do. What are you most excited about? How transformational can some of these technologies be over the next 10 to 20 years? Leaving banking aside, but really thinking about what the future might look like.
I have an Alexa in my kitchen at the moment, and 9 times out of 10 what you use it for is, Alexa, can you put on Radio 5, or Alexa, what are the current football scores, or Alexa, what's the weather like, and this sort of thing. Round the corner we're heading towards, Alexa, can you rent a car for me? I need to pick it up at Austin Airport, and I want to drop it off at Dallas Airport, a week Thursday. And my Avis number. Can you just do an Avis? We're not that far away from that, really. And I think that has very transformational impact. I think a bit like the sort of smartphone thing, right? So a few years ago, phones were getting smaller and smaller and smaller and smaller, right? You remember that kind of Zoolander thing where they all had those tiny little phones and things? That was sort of funny. And then they started getting bigger and bigger again because of screens and apps and that sort of thing. So in parallel with that, you have a computing power and complexity that goes with it. But it could be about to go into reverse again. Because at the moment, a lot of the things I do on my phone, I have to run an app for. And I use the different apps to do different things. But of course, we're heading towards me just asking my phone, oh, is there a tube strike today? Oh, God, what's the best way to get up to bank then? And it's not me fiddling about with apps and putting in, oh, I'm at Liverpool Street, how do I get to here? And you know what I mean? So actually the complexity of those interfaces begins to go away. And because the People talk about the intentional economy. I mean, your phone knows what you want to do and can help you. Brett King wrote a very good book about this stuff called Augmented, where he was arguing, it isn't that the robots are going to take over, but things will become augmented by these technologies. And I think as a vision for the next 10 years, that's pretty reasonable. So if you're talking about the mainstream stuff, I think AI is the next set of transformations. If you're looking out of the corner of your eye for what's sort of is it people say in left field? Is that what American? If you're looking out of the corner of your eye to see what's in left field, I might be very tempted to keep an eye on Internet of Things, because right now it's all pretty shambolic. People are connecting their toasters to the internet. The toasters get hacked. Now everyone's Wi-Fi networks are open. People are taking over other people's cars and driving them around and goodness what else. So this is all pretty hopeless. But, if we could have, a little bit of a breakthrough in security, you've got people like ARM with the TE, Intel SGX. You could see a next generation of those kind of things. So you could have some actual security in the chips that are going into the devices. Then IoT gets transformed into a place where business can get done.
I'm personally very excited about the coming advances in augmented reality and virtual reality and the new, new fundamental experiences that are going to result from that. And it's just, mind-blowing if you really sit down and think about what the convergence of all these technologies that we're talking about could potentially mean. Of course, it does make me wonder how, I don't know, if 5-10 years from now we're sitting around with VR headsets in which our friends' avatars are present with us in some fantasy world, and we're all hanging out and having a good time, and AI and IoT are driving our movements and lives and interactions, how we're possibly going to be also standing in line at a bank branch trying to clear a check.
That'll only happen in the US. That won't happen here. I think it's not that far-fetched to imagine this sort of thing happening. The sort of thought experiment I would do is to say, if you could suppose there was a Samsung Eye, which you could see, like I'm a little short-sighted, I have glasses, right? So now all of a sudden there's a Samsung Eye, so I can replace my eye with a Samsung Eye, and with the Samsung Eye I don't need glasses anymore, I can see. But Samsung, they would never stop at that. They're inventive, innovative people. So my Samsung Eye would probably have a zoom on it and enhanced night vision, and possibly a digital clock and display in the corner if I need that as well. Maybe my Twitter feed sort of scrolling in the distance down there. So who wouldn't have an eye like that? Like if you could get an eye like that, which did all the same things that your eye can do, plus it has a zoom and good night vision, why wouldn't you? And then you think, well, oh my God, who would spend money on that sort of thing? Do you have any idea how much money is spent every year on cosmetic surgery? So the idea that you would augment that way, to me, doesn't seem far-fetched. In fact, I think it's extremely likely. So I agree with you about that. But that's me and something I'm still in control of. The idea that
assuming you trust Samsung,
household objects are chattering behind my back, that's a bit more disturbing. No, of course. That's why you have to have certain kinds of security models in place which are based on open, not proprietary stuff and blah blah blah. Yeah, we know all that, but yeah.
The whole data, security and privacy and is a totally different conversation, one for another day. But I think it very much plays into all this. And
privacy is another 10 hours on its own to talk through these things.
Well, I think we've already bored our listeners long enough with digital identity. Dave, what's the best way for people to find out more about you and connect with you directly?
Well, our website is www.chyp.com, chyp.com, and if you come through there, you can contact us there. If you want to see what I'm up to, I'm completely obsessed with Twitter. I'm at DGW Birch on Twitter, and I'm always there. Or you can do it the traditional old-fashioned business way, and check me out on LinkedIn.
Great. Well, Dave Birch, thank you very much for joining us today.
Not at all. You're welcome.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.